Good morning, students. Yet another video on depreciation. Third part. Here also we will learn about straight line method only, but we will be learning about provision for depreciation instead of depreciation. Let's understand what is the meaning of provision for depreciation. Provision for depreciation account is the account of provision of depreciation. First of all, we should understand provision of depreciation. Let's understand what is the meaning of provision for depreciation. Provision for depreciation is the collected value of all depreciation. With making of this account, we are not credited depreciation in asset account, but transfer every year depreciation to provision for depreciation account. Every year we adopt this procedure, and when assets are sold, we will transfer the sold assets total depreciation to credit side of the asset account for calculating correct profit or loss on fixed assets. This provision uses with any method of calculating depreciation. That means provision for depreciation also known as accumulated depreciation. Also known as accumulated depreciation. Accumulated depreciation. Provision also means accumulation. See, when we are maintaining provision, we are not disturbing our assets value. What we are doing? We are writing everything in one account, that is called provision, and we are going on accumulating the provision value. Depreciation is not disturbing our machinery, but depreciation is disturbing only provision, means we are transferring the entry of depreciation into provision instead of machinery. Let's see the features of this provision. Fixed asset is made on its original cost, and every year depreciation is not transferred to fixed asset account. Provision of depreciation account is conglomerated, that means accumulated value of all old depreciations. Entry of depreciation will change into depreciation account debit and provision for depreciation account credit. We will not do to machinery. Machinery account credit we will not do. This system can be used both in straight line and diminishing balance. Calculation of loss on sale is very important, whereas provision of depreciation account is kept. And how we will calculate? We will calculate like this: cost of sale of fixed assets less total depreciation up to the date of sale. We will get the book value of the asset, and then we can calculate whether there is a loss or profit on sale of machinery. The journal entries remain same. This one, asset to cash when you purchase the asset. Charge of depreciation will become depreciation to provision instead of depreciation to machinery. And closing entry will be profit and loss account debit to depreciation. Provision for depreciation, as it goes in the balance sheet directly, I have already told beforehand also, those items which goes in the balance sheet directly within the liability side or subtract from asset or asset side, they don't need to be subtracted, they don't need to be closed. Depreciation being a nominal account is closed in profit and loss account. When we sell the asset, same entry, cash account debit, provision for depreciation account debit to asset. If there is a loss, we will write over here. If there is a profit, we will be writing another entry like cash to asset, then provision for depreciation to asset, and then asset to profit. We first decrease the asset with the value which we have got, which is perhaps more than the book value. That's why it's a profit. And then again, we reduce the excess asset value to profit and loss account. We will understand this when we will do the sums. This is a sum. In this sum, we have our provision for depreciation. This sum is done. So purchase machinery on 1,115 rupees 21,000 from Karan Brothers and paid them 10,000 on 1,915. So the machinery account and provision for depreciation account. So the machinery account and provision for depreciation account for the year 2014-15, 15-16 and 16-17. Year ending is 31st March. The machine was sold on 31st 12 2016 at rupees 13,000. assuming the life of the asset is 10 years and the scrap value is 1000. See, in this sum, in straight line method, though the rate is not given, so we should know how to calculate it. This is the way we will be able to calculate the depreciation. Asset was purchased 21,000. How much we have paid, that is irrelevant. We have purchased, the value of the asset is 21,000. The life of the asset is 10 years, scrap value is 1000. Calculation under SLM, cost of asset minus scrap value by useful life of the asset. Cost of asset 21,000 minus 1000 the scrap value, divide by 10, that is 20,000 divided by 10 is 2000 per year is the depreciation. Then depreciation is 2000 into 3 by 12. It is per year. Why it is per year written? It is 10% per annum. Oh, sorry, not per annum. It is uh, per year. It is 2000. This calculation of depreciation is giving me per year. We are selling the depreciation. We have purchased the depreciation on 1/1/2015. Our year ending is March. So January, February, March, 3 months depreciation we have to calculate in the first year till 31st March 2015. So our depreciation is 500 for 3 months. This is our workings. Let's do some more workings in the table format. We have purchased the first machine 21,000, less depreciation 500. Value of depreciation on 1/4/2015 is 20,500. Again, depreciation for the entire year 2000 till 31st March 2016. The value became 18,500. You sold the machinery on 31st 12/16. That means 9 months more. In 9 months, the depreciation is coming to 1,500. Under unitary method, you can find out 2000 divided by 12 multiplied by 9. Then the value on 31st 12/2016 is 17,000. On that date only you have sold the machine. You sold the machine in 13,000. So the book value was 17,000. You sold the machine in 13,000, means you made a loss. Loss on sale of machinery is 4,000 because the book value was more and you got less. Your value of machine was 17,000. You have sold it in 13,000. So obviously you made a loss of 4,000. So this is the loss. This is a working note. Let's see the journal entry. When you purchase the machinery, the journal entry is machinery to cash 10,000 to Karan Brothers. Why Karan Brothers? Because you have made the payment on the same day 10,000. On the same date you have made the payment rupees 10,000, but 11,000 is still due. So that's due amount we have written on 1/9/15 you are paying the next 10,000, next 11,000. So the due amount you are writing as Karan Brothers to vendor, that means purchase the machinery on credit, machinery to Karan Brothers, 11,000. Depreciation for the first 3 months, depreciation to provision for depreciation. See students, we are not writing to machinery because we have maintained provision. So very simple. If provision is to be maintained, you don't disturb machinery, you write over here provision. Then profit and loss account to depreciation, we close the depreciation account because nominal account needs to be closed as I told earlier. Then the next year again the same entry, depreciation to provision and profit and loss to depreciation, the amount of the whole year's depreciation, that is 2,000. Next year till 9 months, depreciation to provision 1,500, profit and loss to depreciation again 1,500. Then you have sold the asset, cash account debit 13,000, provision for depreciation 4,000, profit and loss account debit 4,000, and machinery account. Machinery account is 21,000. See over here, students, that we have recorded over here as cash, how much you have got the asset value 13,000. Entire depreciation accumulated is 4,000. If you will add up, see over here 500, this place again 2,000 and 1,500 again. So 1,500 plus 2,000 plus 500 is 4,000. They all have been credited. So we cancel it out. Provision for depreciation 4,000 in the debit side. So provision for depreciation is cancelled out on the date of the sale. Cash you have got 13,000. Your value of machinery was 21,000. We will take the original value over here under provision method. 21,000 because we are writing the entire accumulated depreciation over here. So it is automatically coming 17,000. See 21 minus this 4. And you have sold the asset in 13,000. Balancing figure is the loss. This balancing figure is the loss, which is nothing but your 4,000 is the loss. This is the balancing figure. which is the loss. So this is the journal entry. Now we will be doing the ledger. Machinery account. In machinery account, just posted 2 cash, 2 current brothers on 1/1/15. 31st 3/15. There is a balance. We will not have to transfer anything over here. Provision will be, or machinery will not be disturbed. 21,000 is balanced, carried down, balance brought down. Again, the balance will remain 21,000, 21,000. Again, you see the next year nothing has changed. It has come over here on 31st 12/16 by provision for depreciation account 4,000, by cash 13,000, by profit and loss account 4,000. See, we are not disturbing the machinery account over here. Why? Because we have maintained provision. When we are maintaining provision for depreciation account, first depreciation two provisions, so first 3 months 500, then that also we are not transferring in PL, we are writing two balance carried down, by balance brought down again 500. This will be the date will be 1/4/16, balance this one 1/4/15, sorry dear, 1/4/15, by balance carried down 500. Again, by depreciation on 31st 3/16, the entire year's depreciation 2,000, balance becomes 2,000 plus 500, 2,500. Next year for 9 months, it is 1,500. So the entire depreciation is remained over here as 4,000, that is transferred on the date of sale to machinery, 31st 12/2016, machinery account. So to machinery account. This is your homework, students. This you will be doing as homework, this sum. And over here, purchase the machinery 24,000 from cousin brothers and paid them this date. Show the machinery account, provision for depreciation account, and profit and loss account extract for 14/15, 15/16, 16/17. Year ending is 31st March. The machine was sold on 31st 1/16 at rupees 18,000. Assuming life of the asset is 10 years, so scrap value will become zero. Let me tell you this one. You have to prepare one extra account, profit and loss. I have not shown profit and loss in this. Profit and loss, if I would have shown, this would have, just you have to write over there as two depreciation by nothing, just two depreciation for 3 years, two depreciation 500, then again next two depreciation 2,000, and again next two depreciation 1,500. That only you have to show in P&L account. Okay, so this is our sum. Okay, we have maintained for 2 years only, so this part of the sum to write is wrong. We have maintained for 2 years, so 15, 16, 16, 14, 15 and 15, 16. Thank you, students. Please do the homework sum and please send it to me. Thank you very much, students.